Bitcoin in trouble because of BRICS currency. You might not believe it, but the end of Bitcoin is near. A few years ago, people used to believe that Bitcoin's price would soon hit $1 million, but now it seems Bitcoin is going to face significant challenges because BRICS nations have announced plans to launch their own digital currency, which will end the dominance of both US dollar and Bitcoin. Join us today as we unveil the top 10 facts surrounding the BRICS currency and how it is going to take over the US dollar and Bitcoin. Make sure to watch this video till the end because on number 1, we will reveal a secret that will leave you shocked. So without further ado, let's jump right into it. Number 10. BRICS pursuit of cross-national digital money. The BRICS economic bloc recognizes the need to reduce their dependence on the United States and establish a more independent financial system. Now, the significant step they are taking is a pursuit of cross-national digital money. This move not only aims to enhance financial sovereignty, but also addresses challenges faced by these countries in the global economic market. The economic power of the BRICS nations cannot be ignored. In 2018, their combined nominal GDP reached a staggering $40 trillion, accounting for approximately 23.2% of the gross world product. This substantial economic influence gives them the opportunity to shape global affairs and establish alternative financial mechanisms that challenge existing systems. The competitive nature of the global market poses challenges for the BRICS countries. They face competition from other influential players, particularly the European Union and the United States. Despite their economic prowess, their diplomatic efforts to alleviate international sanctions have had limited success, particularly in politically sensitive markets like arms and energy carriers. Number 9. Advantages of a BRICS cryptocurrency. A single cryptocurrency as a universal means of settlement among BRICS nations would solve many of the problems they face in the global economic market. It offers several advantages over traditional financial systems. The main advantage is the potential to circumvent US sanctions, a topic that was discussed during the 11th BRICS summit. By creating a common cryptocurrency, the BRICS nations could stimulate settlements between member countries while reducing their reliance on the US dollar. The new system could also serve as an alternative to international payment mechanism SWIFT, facilitating trade with countries under US sanctions. The decreased reliance on the US dollar is already evident in some BRICS nations. For example, in Russia, the share of USD in foreign trade transactions fell from 92% to 50% over the past 5 years. This trend, along with the general movement to reduce the dominance of the US dollar, contributes to the potential for a BRICS cryptocurrency to further weaken the influence of the dollar in the global monetary system. Number 8. Environmental impact of Bitcoin mining. Bitcoin mining, the process by which new Bitcoins are created and transactions are verified, has come under scrutiny due to its significant energy consumption and environmental impact. As the popularity and adoption of Bitcoin increases, so does the concern about its carbon footprint. According to a study published in the journal Nature Communications, Bitcoin mining alone could push global temperatures above the 2 degrees Celsius threshold by 2033, contributing to climate change. The energy consumption associated with Bitcoin mining is substantial, with the estimates suggesting that the annual energy usage surpasses that of entire countries such as Argentina and the Netherlands. Addressing the environmental impact of Bitcoin mining is crucial for the long-term sustainability and acceptance of cryptocurrencies. As the BRICS countries and other nations explore their own digital currencies, they may consider adopting more sustainable mining practices to reduce their carbon footprint and align with global efforts to combat climate change. Number 7. Financial inclusion and access to banking services. One of the potential benefits of digital currencies, including those pursued by the BRICS countries, is the opportunity to enhance financial inclusion and provide greater access to banking services, particularly for undeserved populations. According to the World Bank, around 1.7 billion adults worldwide remain unbanked, lacking access to basic financial services. This gap in financial inclusion disproportionately affects individuals in developing economies, where traditional banking infrastructure is limited. Digital currencies, supported by the BRICS countries' cross-national initiatives, could provide an avenue for financial inclusion by enabling secure and low-cost digital transactions. Through the utilization of mobile phones and digital wallets, individuals without traditional bank accounts could participate in the formal economy and access a range of financial services, including savings, payments, and remittances. Number 6. The impact of Bitcoin's market value. The introduction of a BRICS currency has the potential to impact the market value of Bitcoin, the world's leading cryptocurrency. Bitcoin's value is closely tied to investor sentiment, market demand, and adoption rates. The advent of a BRICS currency could divert attention and investments away from Bitcoin, leading to a decrease in market demand and potentially affecting its market value. According to a report by CoinShares, a digital asset investment firm, the global Bitcoin trading volume reached $5.2 trillion in 2020, with a significant portion driven by institutional investors seeking a store of value and hedge against traditional financial systems. However, the introduction of a BRICS currency backed by influential nation-states and potential stability could attract a portion of these institutional investors, diverting capital away from Bitcoin. The impact on Bitcoin's market value would also depend on the broader acceptance and adoption of the BRICS currency. If the BRICS countries successfully establish their cross-national digital money as a widely accepted medium of exchange and store of value, it could lead to a shift in investor preferences, potentially affecting the demand for Bitcoin and its market value. The value of Bitcoin is influenced by its mining process. As we have discussed in number 8, Bitcoin mining requires significant effort and energy, resulting in a limited production quantity. But BRICS currency has some more advantages over Bitcoin. Keep watching because on number 1, we will discuss something that will leave you convinced that Bitcoin's end has arrived. Number 5. The threat to Bitcoin's decentralization. One of Bitcoin's key selling points is its decentralized nature, operating independently of traditional financial institutions. However, the introduction of a BRICS currency backed by influential governments poses a challenge to its decentralization. With the support of nation-states, the BRICS currency could potentially offer the advantages of both centralized and decentralized systems, providing strong competition to Bitcoin. The BRICS countries have had the means to promote and stabilize the adoption of their currency, which could attract users seeking a reliable and government-supported digital currency. This centralized approach may appeal to individuals who value regulatory oversight and stability in their financial transactions, potentially diverting attention away from Bitcoin's decentralized model. Number 4. Global economic implications. The introduction of a BRICS currency carries significant implications for the global economy. If successful, it could weaken the position of the US dollar as the world's dominant reserve currency. As countries increasingly diversify their reserve holdings, the demand for alternative assets like Bitcoin may diminish. According to data from the International Monetary Fund, IMF, as of 2021, central banks held approximately 61% of their foreign exchange reserves in US dollars. However, the rise of a BRICS currency could lead to a shift in the composition of global currency reserves, reducing the reliance on the US dollar and potentially impacting Bitcoin's role as an alternative store of value. Number 3. Regulatory challenges. Bitcoin has faced regulatory challenges in various jurisdictions due to its decentralized and anonymous nature. The introduction of a BRICS currency backed by influential nation-states could lead to more concerted efforts to regulate and control cryptocurrencies. Governments within the BRICS bloc may view their currency as a means to establish greater oversight and control over financial transactions. This could create an environment that is less favorable for the growth and adoption of cryptocurrencies like Bitcoin. According to a report by the Financial Action Task Force, FATF, an intergovernmental organization combating money laundering and terrorist financing, several countries within the BRICS bloc have implemented or are planning to implement regulation for cryptocurrencies. These regulations often include stricter Know Your Customer (KYC) and anti-money laundering (AML) requirements, which could impact the anonymity and privacy features that have attracted users to Bitcoin. Number 2. Geopolitical factors. The launch of a BRICS currency holds geopolitical significance, as it challenges the established financial order dominated by Western powers. The BRICS countries aim to exert greater influence on the global stage, and their currency could serve as a strategic tool to achieve this goal. As geopolitical dynamics shift, Bitcoin may find itself caught in the crossfire. Governments within the BRICS bloc, as well as other influential nations, may view Bitcoin as a threat to their own financial control and stability. This could result in increased scrutiny, regulation, and potential restrictions on Bitcoin's use and acceptance. According to a report by the Council on Foreign Relations, the growing influence of digital currencies, including Bitcoin, could disrupt traditional power structures and financial systems. This disruption could lead to geopolitical tensions as countries navigate the evolving landscape of global finance. Geopolitical tensions and conflicts between nations could spill over into cryptocurrency market, affecting investor sentiment and market dynamics. Bitcoin's global acceptance and adoption may face challenges if governments perceive it as a tool that undermines their national currencies or financial systems. Number 1. Market volatility and investor sentiment. Bitcoin's market has been characterized by significant volatility, often driven by investor sentiment and market trends. The introduction of a BRICS currency may introduce additional uncertainties and market fluctuations. Investors seeking stability and security may opt for the BRICS currency, which is backed by influential nation-states. This shift in investor preference could lead to reduced demand and increased price volatility for Bitcoin. According to a report by JP Chase, market volatility for cryptocurrencies like Bitcoin tends to be higher during periods of financial stress and uncertainty. The introduction of a BRICS currency, which aims to provide stability and government support, could impact investor sentiment and potentially divert investments away from Bitcoin during such periods. So now what are your thoughts? Let us know in the comments section. Thanks for watching.